Thanks for tuning into Talking Point. I'm your host Nirav Shah, and as we are celebrating the week of the 75th anniversary of the Indian independence, it gives me great pleasure to welcome the think tank of MK in our studios to talk about how do they think the next year, arguably the next decade, is slated to happen after the last few years of capital markets, last few years of independent India, and what has happened in that period. So great having both of you, gentlemen.
Thank you.
Krishna and
Thank you
Nirav,
for
great having
inviting
you.
us.
No, the pleasure is ours.
Mhm.
Can I start with you, Krishna? What's your sense of how well placed would Indian businesses or capital markets be for the course of this decade on the back of what has happened in the recent past or for the entire history?
So we are phenomenally optimistic about the opportunity that India as a whole will see in the next 10, 15 years. I think a look at the foundation is very strong. Today, we are the number six country as far as the GDP is concerned in the world. And there is no reason that in the next 10 years, we should not be amongst the top three. Corporate India, again, robust balance sheets, very, very confident. They have gone through the grind in the last 6, 8 years, including debt, etc. Everything is behind them. Systems, processes, all. So corporate India is expected to do very well. Look at the government, the kind of reforms that they have unleashed over the last 6, 10 years. So we should see the benefit of that also flowing in. So to answer your question, are we optimistic about the next 10, 15 years? Yes. Can the GDP grow at, say, nominal GDP grow at 10 to 12% compounded for the next 10 years? Definitely. Yes, there are some challenges. Yes, we are a large country with 140 crores as our population. So the glass half full, glass half empty story will always continue. But I believe that the chances of we being the leaders in terms of GDP growth in the amongst the global countries is very, very high. So very optimistic. India's 75th Independence Day celebrations, and I believe the next 25 years. Today we are what, a $3 trillion economy. There is no reason that we should not be, say, close to 13 to $15 trillion economy when we celebrate 100 years of India celebrations.
Inshallah. Who knows? We may talk then again.
Absolutely, certainly.
Yeah, most
Look
certainly. I
forward.
like that optimism.
Yeah.
Uh, okay, Nirav, from a perspective, so I mean, one part of how the standing aspect of the last 2 years has been that while foreigners have quite deserted India, so to say, at least in the last 12 months, the Indian inflows have been robust. I personally am very happy because I always used to lament that why is it that the premier institutions are owned by foreigners and not by India? But let's face it, for the growth to happen, outside capital is a must. Thus far, in the minds of every global investor, twin deficit country, in the event of a global issue, go out and short. Currency takes a toll, markets take a toll. Are there things at the margin or otherwise that over a period of 3 to 5 years can change that? Be it FISC, be it the CAD, and be it the outlook that foreigners have towards India.
So first of all, let's put this in perspective that when you look at the large outflows that have happened, that is also because India is one of the best performing markets. So you sell what you can sell. No, I'm saying if the market is around 20%, your view changes about selling. So you have to keep that in perspective. That is one of the major reasons. Secondly, I completely agree that we are a twin deficit countries. We are an unusual run in DXY, right? You've rarely seen a 13% move in 16 months. And it could be for a variety of reasons. Largely, it is Euro and Japan, but then it's a collateral damage. So you have to face that. Uh, Thirdly, I think it's important that to me, this is a very big thing that you notice that for the first time, Indians have been able to absorb this massive selling that has happened, which means that when I reevaluate the country, right, my risk premium should go down, right? But the moment I say that I can sell and I can send billions of dollars without impacting the market, that reinforces the view in terms of the depth of the market. So I think these are very challenging factors. So that is your first part of the question. Your second part of the question is that, which is very interesting. I don't know what can happen in 3, 4 years, but I think if you take a 10-year view, so I just read yesterday, it's very interesting. If you look at the last 30 years, right, India's actual oil production is down in absolute terms, right? You're producing about some 10%, you are producing about 9% of requirements. Your absolute volume of oil imports has gone up by 20 times,
Yeah.
right? And we've been saved by software, right? Now, when I try and see what can happen in the next 10, 15 years, we are talking about the fact that there'll be electrification. We only don't know the pace of adoption. We know it's going to happen, right? And that is a major anchor, right? On my. So I think in next 10, 15 years, we look at a, you can actually see yourself to be a current account surplus economy. It's very difficult to think right now. But as Bill Gates says that, you overestimate the rate of change in the near term, underestimate the rate of change in the long term. I'm very bullish, like KK says, on next 10, 15 years. Probably the best decade we'll have in a long, long time because of the macro and micro falling in place.
Very interesting. Krishna, for some bit of this to happen, right? One is, of course, electrification and what it does, but two is also the pace at which India moves towards, say, for example, green hydrogen and hydrogen fuel. But it's also a lot dependent on technology. So we're trying to tackle the electronic imports via all these PLI schemes, and God willing, they succeed. The other big issue about India, the import bills of crude, etc. Do you reckon that there is a seismic change in the offing, or is it subject to, uh, aside of electrification, how swiftly and how well can India move on the biofuels and the green hydrogen piece?
So yeah, I think let's look at this way. I mean, the political leadership is so well positively inclined the way they have been driving the whole renewable process. So I think that's very clear that yeah, if there are some technological changes which come in and which possibly impacts the pace of decarbonization, as you say, that could be but otherwise there is a given that the kind of political leadership has invested their capital into ensuring that we go big time on renewable energy and reduce our dependence
Dependence.
on fossil fuel. So that is a given. At the pace, as Nirav said, can possibly be, we don't know, but it is going to happen. And look at the political leadership, the way they have put their thrust behind manufacturing, the way they are going ahead with various PLI schemes to ensure that India is not dependent on manufactured goods on foreign countries. I think that's again a very strategic thought process. And if you have to get that right, you have to have phenomenal internal electricity and power, and which cannot be dependent on oil. I mean, you have to have, or even coal. You have to have renewable power. So these are all parts of the jigsaw puzzle about how we are going to take the country to the next level. If I have to add more than about this renewable this thing, I think the biggest challenge that India faces today is ensuring the ease of doing business. That has to improve phenomenally. I think possibly the plethora of laws which are being introduced, which is very important to give comfort to the domestic investors as well as global investors. But maybe the legal system has to overcome. I mean, maybe legal reforms are slightly behind the curve. That's
Mm.
the sense I get. So maybe in the next 5 years, we'll see the government unleashing a lot of legal reforms. I'm not too sure about the number of courts or the number of judges, whether they have gone up in the same speed with which laws have gone up.
Okay, judiciary reforms per se.
Right.
Okay, just one quick follow up, Krishna, and that would be, yeah, precisely. So you mentioned this judiciary reforms, which are technically not business related, but yeah, they do aid the ease of doing business per se. Uh, any business related outcome, or do you reckon now a bunch of reforms, be it the Jam Trinity, the the GST, etc., are all in place? And if India consistently underestimates at the start of the year about the tax receipts, and if they keep on building up as the years go by, does India have a fighting chance at trying and bringing in the reining in the fiscal deficit numbers much ahead of what people think?
Definitely, I think if you have seen the way the GST reforms have played out, I think when we started off, reaching that 1 lakh crore revenue as a number was a target. You know, I used to feel very happy that okay, now 1 lakh crore has been reached on a monthly revenue, and now what we are seeing is like 140 per month has become the base, and the whole unorganized sector has become part of the organized sector because of the GST reform. So the leakages in the system have come down tremendously. I don't think so. We estimated that these kind of numbers can come in. So my sense is that the GST reforms is such a big reform, which is transformation, which has made the country one country instead of separated by various regional laws or state laws, etc., etc. I think that has been a phenomenal game changer as far as the business environment itself is concerned, and that is something which will possibly uh, will always be caught by surprise. The revenue numbers are going to be better than what the system is estimating. Only thing is that yes, that has a negative fallout in sense that the organized sector, the big guys, possibly are able to get the benefit out of this much bigger than the as MSMEs or the smaller entrepreneurs. I think that is something the government will possibly figure out how to take care of. Otherwise, I think this is one big reform from a business perspective. I think it has given a solid leg up to all entrepreneurs who want to do business legally, right way, and grow the business.
Interesting. Before I come to markets per se, but just a quick word on what should be, can be done on the capital market side to ensure that, again, from a global perspective or even from a local perspective, large investor perspective, it is viewed much more favorably than what it is being viewed right now.
Well, I don't think being market participants, you can always try and gun for the fact that you want lower taxes. We'll talk about lower transaction taxes. You may want to talk about lower
Predictability.
LTCG. I don't think it's necessary. I think the fact that you are seeing so much of savings coming in, what is critical is that your returns have to be appropriate to the substitute returns, right? So the fact that your real estate, you've been able to curb the very hyperinflation, 10-12% that you are seeing in real estate, that has come down, which means that these markets, equity markets by definition, become more attractive. So I don't think that is required. I think you take care of the economy, take care of the profits. I think investors will take care of the money that flows into the system. I'm a strong believer on that.
Just to add to what Nirav is saying, I think as your economy moves to the next level, you'll require more and more products, global products, equity or derivative or those kind of products, which will attract a different set of investors and increase the investable horizon for various investors. So I think the depth of the market has to continuously keep on increasing in terms of various products which are available for a capital raising, and B, in terms of the investors, global as well as local, who can invest in those products. So I think that is something which is very, very important, both on the debt market and the equity markets, and including, I would also say, the currency and the commodity markets. I think government has been continuously introducing new and new products, with the regulators obviously in sync with that. So I think if that continues, the pace, I believe, can possibly increase. But yes, all the regulators have to act in sync to ensure that. So the biggest challenge or biggest opportunity is, I think, probably the debt market, which probably is not as deep as it should be from
Yeah.
a that perspective. I think that is something which we should possibly see. And the initiative that the government has taken as far as Gift City is concerned, I think that's going to be a big over the years. It could be a big success to attract global investors, make India a hub for financial activity.
Cross fingers, hope that happens too. Now let's talk about the lowest common denominator, which is the regular equity markets. And just trying to understand, let me start with you on this. What's your sense around where does all of this take us? Not necessarily in the next 6 months or whatever. We'll talk about that as well at the fag end. But what's your sense about where we go from here over the course of the next 3 to 5 years?
So, like I said, I think the construct of the economy actually surprised me in terms of what you've done the last 6 months. Given where the oil was, given where the inflation was, I think you've done phenomenally well, right? Both in inflation front, even in terms of if you look at any of the leading economic indicators like PMI. So, you are very, very well set. I suspect that you are getting into a stage where India will now have lower inflation as you move forward. Please, we have to appreciate the fact that we started inflation targeting only the last 6-7 years. It takes time, decades, for any governor to establish credibility. We are going there. We are moving that direction. And as you see that, I think somehow I believe that you've lost the decade, because if you look at credit to GDP ratio, it was at 50% last 10 years. That is going to change in the next 4-5 years, right? uh, Multiple facets. You got 100 unicorns, they'll come back to the markets. The structure of the Nifty will change in the next 5-10 years, right? If we're talking about financial inclusion, you're only looking at, I'm saying, UPI. We're talking about ODing, which now tries to democratize, all the listings on various platforms and stuff like that. Why that? I mean, I just read yesterday again that her girl null jal,
Hmm.
right? That in last 2 years has gone from 16% to 50%. Now think of it. Now this should have been in place 20 years back,
Sure, sure.
right? But the fact of the matter is that now this phenomenal improvement in productivity, right? When you start getting this access to basic hygiene, healthcare, uh, the insurance scheme that have been running by the government, uh, I think that market should double in the next 4 to 5 years.
Okay.
Broadly, I'm just looking at a similar 15 CAGR earnings, multiples remaining the same. Uh, that is a base level expectation that we should have.
Okay. So the Nifty 100, Nifty 150, Nifty 200 can very well do that. The top organized, as Krishna mentioned, they get larger benefits, etc. What happens to the broader markets, Nirav? That's the question.
I am more bullish on the broader markets than I'm on the only the larger cap companies, and that is largely because of anecdotal reasons.
Hmm.
We've got a conference now and next week, and we've
I
got
wanted to
150
ask you about
companies.
guys about that. Yes.
We've got 150 companies over there, so we've gone personally, met so many companies and all. So I have seen some phenomenal changes that have happened in terms of the way the companies are managed, right? Over the last 10 years, the way promoters have started approaching risk. If you look at this balance sheet, again, put the perspective that you've got this range of regulatory reforms like PLI schemes, and the fact that this geopolitical risk. I mean, I've met so many companies. The problem now seems to be not so much of a demand, it is more about supply. Look at textiles, right? I met so many companies are saying that, we can double the turnover. The fact of the matter is that I still need time to raise equity, debt, set up plant and machinery. The market is there, the demand is there, right? Papers, the sectors that were not thought about for such a long time, right? Auto ancillaries, building materials. Uh, so my sense, one of the things that I tell a lot of my investors is that this is a time to run a diversified portfolio, right? Generally, what has worked in the last 8 9 years is that you take 9 10% bets on large cap companies that's done well. I think that you can run a portfolio of 80 90 stocks, and I think you do phenomenally well. At least that is a view I'm having. Maybe KK can
No,
add.
I think yeah, the energy levels of mid-sized promoters,
Hmm.
and when I say mid-size, I'm talking of companies in the range of say 2,000 to 10,000 crore market cap. Their confidence levels today about investing in their business and the kind of growth possibilities that they see for themselves over the next 10 years in their chosen line of activities. Now, whether it be auto ancillaries, whether it be textiles or building materials, I think everywhere uh, they seem to be very, very confident about their growth prospects. Their balance sheets are so robust, their ability to borrow is also very, very strong. So my sense is that the broad market will obviously give at least 30 to 40% higher returns than what you can expect from the large cap companies, and which is rightly so. So the coming decade could be the decade for small and mid cap companies, and the entrepreneur spirit which is there and is going to be unleashed, and we will see so many of these unicorns possibly getting lifted. Yeah, there are some many of them which are possibly not earning today, so those things will, I'm sure, iron out, and they'll figure out how to make. But the energy levels, opportunities, and the best part is that it's not only the entrepreneur who has been in business for say 20 25 years. It is the second generation in many of these companies who are raring to go.
Okay.
They see the opportunity for themselves, and so I believe that next 10 years, next 10 15 years are going to be phenomenal for mid-sized companies.
Pretty interesting. One question. Just whether this could be a change of scenario in the decade, in the sense that I thought, to my mind, 2011 to 2020 kind of belonged to B2C. You could argue IT was a separate kettle in fish, but otherwise, from a domestic perspective, B2C. Can this decade see the advent of B2B doing remarkably well, or is it so policy driven that investors would find it difficult to bet large sums of money on B2B?
No, definitely. I think so. If you look at it, that's what our theme is, that manufacturing as a theme and should do very well in the next 5 to 7 years, 5 to 10 years. And that's primarily a B2B kind of a theme.
Precisely.
And that's where the sector has also some kind of, you can say, mean reversion. That part of the segment has not done so well from a capital market perspective in the last 10 years. And yeah, services and IT and all those sectors did well. But I think the whole thrust today of the government and the entrepreneurs, etc., in that part of the segment is phenomenal. I think so. You should possibly see massive outperformance from companies which are focused on manufacturing, be it for domestic consumption and also for exports. I think this China plus one is definitely a positive for most of the manufacturing companies which have some export base and capabilities.
Very interesting. What is the conference all about? What is it trying to showcase? And to be, I know you. I mean, you mentioned 150 companies, so you're trying to present the whole buffet. But surely, as a cook, you might have some favorite dishes as well. So tell us a bit about the conference. Tell us a bit about what you and then both KK think are going to be the premier, the first amongst equals, if you will.
Yeah, so I mean, we've so the theme of the conference is ideas for a $5 trillion economy, right? But
Mhm.
I'm saying that is just a journey. So, like, KK just mentioned that you are looking at compounding of 11-12%, you are doubling your economy every 7 years, right? So that it excites me. Just think of it that 2002 to 2022, just 20 years, and 20 years nothing in the life of a nation, right? So 20 years in 2002, you did not have any banks were talking about telecom was infancy. What a big churn you've seen. I think we are going to see a far, far bigger churn when you look at the next 20 years, right? So, phenomenal opportunities. So, I'm saying we will not differentiate between the corporates. We value each of our clients, all the 150 companies, but they are addressing different risk return. Yeah, so it's a buffet, right? What we've tried to ensure that we'll have almost all the sectors which are very well represented and across the market cap. So you'll have companies from 1,000 crore market cap to a 2 lakh crore market cap. So that is what's saying to us, the point is that if you are there in our conference 3 years, you will get the pulse of the Indian economy. That is what we try to aim at
Mhm.
broadly.
Okay, but like I said, so therefore, you giving the whole buffet to your mind, uh, what could be the first amongst equals in terms of themes over the course of the next three to
Well,
5 years?
the foundation for anything is banks, financial services. That is 35% of my Nifty, right? There's an unduly large weightage, and they have got a phenomenal balance sheet. Just look at the number that have come out in the current quarter, right?
Yeah.
But I think broadly, the way we look at what's going to happen is that given the construct of the global economy, where we believe that the developed markets will have challenges over the next 6-8 months, their inflation is clearly out of the hand, and therefore there'll be challenges. India has done extremely well. We did not super stimulate, and I think we are taking the punch of the ball at the right point of time, which means that sectors which are domestically oriented, which is banks, capital goods, infrastructure, autos, consumer durables, are those that will do extremely well relatively to where those are more export driven. Then again, you have to differentiate market share, non-market share. But broadly, if I have to give a 30,000 feet view, then over the next 1 year, I think that, and there is a lot of mean reversion that is happening. Autos, you have not done anything for the last 5 years,
Hmm.
right? So there is market share reversion, industry mean reversion, margin reversion, commodity prices are correcting. Yeah, so these sectors obviously stand out.
Okay. Your thoughts before we wrap up on the same
Yeah,
subject, please.
absolutely. So I think obviously I've been talking about manufacturing sector per se, but apart from that, and from a medium term perspective, I believe that the whole sub-segment of financial markets, which is the asset management, wealth management part of the business, I think that has gone through some kind of consolidation in the last few years. And that's where I believe there could be a very big opportunity for investors to look at, and the valuations also have become very, very reasonable. So, as wealth is going to increase tremendously in the next 10, 15 years, by definition, these firms which are part of that segment should also continue to do very extremely well from a shareholder perspective returns. So I think that's again some of the companies which represent that part of the segment are also part of our conference, including brokerage houses. So I think that is a segment which currently possibly is facing some headwinds. Stock prices have also corrected reasonably. Valuations are becoming attractive. So apart from manufacturing, yes, banks will all will do very well. But if you're looking for returns which are far, far superior than the average return, then maybe this one segment should possibly give you opportunity. And another segment which I believe has gone through consolidation for last now say almost 3 years is the whole insurance sector. So companies which represent both the life insurance and say general insurance and health insurance, I think again they are becoming looking very attractive for somebody who's looking to invest in India from a next 10-year perspective.
Wow, great. Gentlemen, lots to take home from this conversation, but most importantly, the optimism that the two of you have, the short, medium, and the long term on our country. So thank you so much for joining in.
Thank you very much,
Thank you,
and
Piyush.
wish you and your team a very, very happy 75th Independence Day.
Oh, yes. It's a big moment for everybody.
Absolutely.
So to you and your team as well, and
Thank
to
you.
everybody out there listening to this conversation, thanks so much for tuning in.